All right, 3.5 minutes. BRB. All right, let's get going. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Wait, Moses says, that is new information, sir? No, it's been in Quant Box forever. This question had to do with seasonality and gold. It's in Quant Box. It's just quantitative analysis of 20 years worth of data. Somebody asked, should gold go up or down? I'm like, you don't know seasonality of gold? Then you shouldn't be trading gold. You're just at a massive disadvantage. I know you don't. Who's going to win, right? But anyways, that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Pachow. Nice to meet you. My name is Wayne. Let's get on with it. Moses says, I only know the third week of August, so you don't subscribe to Quant Box. Wait, what's going on here? Something's changed. What's going on? Nothing's right, I'm told. There we go. Yeah. So that's funny. So for $79, you're holding yourself back from trading gold profitably. Oh, okay. Okay. All right. Let's do around the world. Dollar is weak. Swiss is strong. All right. Well, that's despite, the central bank cutting interest rates. Well, today it's strong. Once again, in Quant Box, I think there was like Aussie Swiss franc short, Kiwi Swiss franc short. Okay. All right. Yeah. So, I rarely remember to upload those. I believe I forgot to upload them today. I've been busy, man. You should just pay the $80 and be knowledgeable. Right, Moses? Come on. So anyways, Quant Box is saying Aussie Kiwi short, Kiwi Swissy short. Aussie Swissy short, Kiwi Swissy short. Okay, so that's interesting. What else is going on? Pound is trying to hang in there. It's been strong for a while. It hasn't been doing much as of late. Euro is more on the downside. CAD is more on the downside. And it's all about the yen. It's all about the yen, So again, Quant Box said Aussie yen short, Kiwi yen short. So is that what you're doing? You're like, what do you mean? Okay, I think I have a Quant Box open. Okay, somebody asked about gold and seasonality, and I'm like, week 36. All right, let me show you that. Just so you know. I'll show you when you're informed. Right there. Boom. Peak, down. This is the shape of the gold market. This is the week over week. Okay? Cool. There you go. Now you can see when you're 2 standard deviations from a mean, you get little buys here, but they're only up for a month. It's only up for a month. That's it. And then it's down to week 45, and around week 48, you're buying it back, and then you're holding until probably week 15. Common sense. And that puts us to about here. Then you take some profit, and then you buy it back, and then you take some profit, and then you buy it back, then you take some profit, and then you buy it back, and you hold. Right in here, you can see there's a little, but I don't think you need a dipsy-do. So if this, in this period was a down week, don't worry about it, and let it build up, and it accumulates back up. But somewhere around here, well above 2 standard deviations above the mean, so somewhere around week 15 or week 16, you should probably take some profit and buy it back in 3 weeks. Simple. You don't know that? It's going to be hard to be a successful trader. Sorry for being so frank. Or you log in and to Quant Box, and it's like, sell CAD yen, sell Kiwi yen, sell Kiwi Swiss franc. Okay. Then you're like, well, what about projections? So sell Kiwi Swiss franc. Okay. So you can go NZD. Swissy Swiss franc. Look, clearly bearish. Sell it. Sell the lower highs. Kiwi yen. Bearish. Very obvious. Easy. It takes seconds to know this stuff. So then you zip over to your yen pairs, right? And they're collapsing. Yeah. So like, here's the one that it's been saying for days. So how long has it been bearish? You're like, Wayne, it told me after it occurred. Oh, well, let's go verify that. You like verification, right? Of course you like verification. Okay, so we go to historical backtest, and you've known for 1, 2, 3, 4, 5, 6 days for sure, but 7, 8, 9, 10 days ago you got the alert. A little bit bearish, extremely bearish. Okay, so now we zip in. So 1, 2, 3, 4, 5. So on the 6th day, Quant Box went crazy bearish right here. You see that? So let me highlight that. Boop, boop. Let me get my drawing tool. Okay, right here, Quant Box went crazy bearish. Right here, it started to prepare you. And now we've hit target. It's very, very likely to be over. You missed it. Too bad, so sad. Too bad, so sad. Okay, now the pips are extremely risky pips, because somewhere in here, the probability of it bouncing back up is high. But remember, Quant Box prepared you here, and it started freaking out around here. Freaking out! Okay? after 8 measures of data, 8 different types of, it's not just technical analysis. That is part of it, but it's a small part of it, fundamentally too. Looking at jobs, looking at GDP, looking at inflation. I mean, boom, 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 boom. Yep. Okay. There was a period right in here where we were going to buy it because of the anti-intervention, but then Quant Box flipped. So, anyways. And I think I did try to buy it here, and I broke even. Okay. If it wasn't this pair, it was some other pair. But it broke even and didn't reverse, and, well, there you go. Cool. Well, what about the Kiwi Swissy? Okay, Quant Box has been screaming bloody murder. Bloody. Bloody, I tell you. Oh, it's been horrible. It's been so bloody. Let me get this set properly. Okay. Cool. Neat, right? It's neat, isn't it? So we've gone from 1 standard deviation above the mean, okay? 1 standard deviation below the mean, 2 standard deviations below the mean, 1 standard deviation above the mean, and now we're 1 standard deviation below the mean. Cool. It's gorgeous, isn't it? Loading, loading, loading. Going through the back tester. That one didn't load. Come on. Try again. There we go. Okay. This goes back to June 17th. How bearish Quant Box has been on Kiwi Swiss franc. Negative 12, negative 11, negative 10, 9, 8, negative 10. Oh, neutral, neutral, neutral. Notice at a period when price was rising. And then right here, negative 4, negative 5, negative 7. Okay, boop, 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 boop. Okay, but since June 17th. So we have to go back. How about all the way June 1st till today? Nope, been bearish every day. At one point, negative 13. Notice it cooling off as price came up and then accelerating back around. So going back to June 1st, all the way to July, whatever it is, 15, 16 today. So a month and a half, every single day, Quant Box has told you, be prepared to sell this asset. Since June. I mean, I only went back to June, but every day it said, wake up in the morning and find a reason to sell this asset. Since that vertical line. So let me, okay. Okay. Does that mean every day you sell? No. Every day you prepare to sell. You're not a bull. Okay? I've done very well trading in the last several months, Sal. Yes. All right. Cool. All right. You see? So you got to know what to focus on and what to ignore. Quant Box is very, very helpful with that. Neat. Neato. Neatorama. Good. Very good. Been hitting my goals. Okay. I just went over seasonality, so you probably missed it. Come on now. Not loading. What's going on? My browser's frozen out. I probably need to update and refresh. What's going on, Bubba? Pull up calendar. Yeah, that's interesting. So it's a whole different technology for calendar, and it's not loading. So my browser, for some reason, is having problems with this. Huh. Got to update my browser, I guess. Huh? Let me do that. Finish updates. Relaunched it. No, it's going to kill. No, I can't do it because it's going to kill my live stream. 2% a month, Jordan. Okay. Now, some of you guys are going to scoff. I know. But if you scoff, you're pointing out a lack of knowledge. So don't scoff. When you look at commodity trading advisors in the United States that trade Forex, okay, in excess of $100 million, that is a tiny, tiny, tiny professional fund. I have buddies that trade 3, 4, 5 times that, and they're tiny. Like 100 million is tiny. Okay. If you do 2% a month, you are number 1 in the entire country out of all professional Forex traders. And those that do 2% a month probably only do it for 3 or 4 months in a row. And then somebody else gets the 2 or 3. They don't do it every month. You know, they're not doing it like 36 months in a row or 30 out of 36. What this usually tells institutional investors is that you're either lucky or over leveraged. And they'll do a risk-adjusted performance analysis on you and figure out why you're outperforming. 2% a month compounding is well in excess of 25%. It's closer to 30%. Now, if you only got 10 grand or 5 grand in your account, okay, yeah, maybe you're pushing 50, 60, 70, 100% a year. It's because you don't have any money, right? And it's proven people with no money will risk it all because they have nothing to lose. But an institutional investor is not looking for 10% a month. They'll run from that. So don't scoff when I say my goal is 2%. I don't have 100 million, but I have enough to lose. So, like when you're looking at my endowment returns, it's pretty close to that. Yeah, 1.5 to 2% a month. I have very, 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 very low risk. It's incredible how little risk I have, and yet I'm chunking out consistent returns and high income with extremely low volatility and an amazing Sortino ratio, and I'm compensating the funds for the amount of risk. My Sharpe ratio is about 1. but my Sortino is an 8. And my vol is 0.2. It's like, it's nuts. So yeah, everything's great, dude. I'm crushing it. Yeah. Okay, crushing it. But anyways, thank you for your concern. So yeah, yens, dude, and the Swissies. Primarily what you should be focused on are the most obviously weak ones. And that's CAD. Aussie has been strong, but has turned weak. So that's probably not the first one you're on. And pound has been, but Kiwi for sure. CAD for sure. So CAD Swissy, Kiwi Swissy, CAD yen, Kiwi yen. If that's all you did, you're also crushing it. But if you don't know how to trade, you're missing all of this, and you're just like, you're not doing it right. You're just like, wow, being left behind. Now, I don't say that to insult you. I might be saying it to piss you off a little bit, because I do want an emotional response, and I want your response to be not me, like you're anti-me. Oh, that guy's an arrogant prick. Well, go ahead, you can think that, but it doesn't matter. You won't change and you'll leave, and it doesn't bother me. Instead, I want you to say, this guy might be right. Like, if you've been focused on something else than the Swissies and the yens, you're just not doing it right. And I want you to say, how did I miss that? I need to change. I need to stop and change. I need to radically change the process in which I behave in the marketplace. You're not being competitive. And I want you to say, I will do whatever it takes to be competitive. I will do whatever it takes to win with honor and integrity. Or you could just be mad at me, call me an arrogant prick, and go find some other idiot on YouTube. That's fine by me. It doesn't hurt me. Okay? But I'd rather you stand up and say, yeah, he's got a point. Okay? And all the information is there. I mean, a 10-day warning, right? Cool. Yeah. Cool. Well, not only is there a tutorial, Savage, but I'm there every morning. I spend 45 minutes every morning with Quant Box subscribers. Yeah. Cool. Right on, Silly Sally. Yeah. Cool. So anyways, I don't have a lot of time with people on these YouTube live streams, so I have to hit you hard. I have to hit you fast. Right? Silver's down. Silver's been a bummer lately, but gold is up, and Quant Box likes gold. You see the role reversal? See? Let me do it this way. Okay, you don't like price action. You like moving averages. Well, I got a boatload of moving averages. Did you buy the dip? Are you riding the moving averages? Okay. Are you going to buy its support, or is it over? Now, I like to use, when it comes to this kind of stuff, I don't want to kill this chart. I don't think I have gold anywhere else. Metals. Yeah. Okay, good. I'll go to metals. XAU. Okay. What you want to do is look for the targets, what we call resistance. Okay. So you go, I guess, daily confluence, bullish bias. That'll give us everything we need. And we bust out here. Okay. What do you think? Are investors and traders paying attention to this line? What do you think? Okay. Now, most likely you said the answer is yes. The next thing is, how important is that line? Do you know? Is it not important? Is it moderately important or is extremely important? Because now you have to maybe override simple technical analysis and simple fundamentals. Fundamentals have been screaming up every day in Quant Box for weeks. Buy gold. So I know you're long at making money. The second thing is, when do you override that knowledge? You need to know how to trade. The fundamentals haven't changed. But do you know how to do technicals? Most people here are like, Wayne, I'm weak on the fundamentals, but I'm great on technicals. Are you? When I coach and mentor people, they tell me they're great at technicals, and then I find out they're not great at technicals. So can you read this chart? What does it say? Anyone want to take a guess? It says it's over, bro. Now, is it? Well, I can't predict the future. I don't know. You can keep buying. But I can tell you what the chart says. This is a monthly R3. Okay? If you breach this level, there's something important going on. Well, Quant Box coached you through all of that. The second thing is, if you get through that level, the absolute 100% always, under every circumstance, there's no exception, you take profit at MR3. I don't give two hoots about this number. So I teach that. This number's important, this number's important, and if you breach those, I don't give two hoots about that. But this one is 100% always take profit. Take a walk, son. Once again, you're like, that's just in the training course. Costs $88 a year. And you would know this. This would just be one of a million things you know. And it's clear. It's not wishy-washy. The thing is, if you don't know this, you're not as competitive, and you are not going to consistently win. I don't know if it'll make you consistently win, but if you're not competitive, somebody else knows and you don't. So what's the likelihood you're going to beat them? Probably pretty low. Hey, but even the best three-point shooter in the NBA misses and has a bad game. 2 for 12, right? But they shoot threes better than you, right? So it's like, you gotta be competitive, right? Like, I'm pushing you. I want you to be competitive. I want you to know this. Oh, but I don't have $88. And why are you trading Forex? The sport of kings. Okay? Yeah, you should be reading books at the library. You should be working nights and weekends and saving your money so you can afford the training course. And then do the training course for an entire year. It's only $88. Do that for an entire year. And then once you've mastered that, open up a demo account and actually learn how to execute trades. Do that for another year or two. And you're like, Wayne, I don't have time for all that education and practice and developing skills. I got to get rich quick. And that's the failure. You see the importance of mindset, but also turning the mindset into activity, right? So look, this is basic. I can read the chart in 10 seconds. Boom, that's a take profit. Well, what if it keeps going up? I don't care. It almost never does. And you can just go back in history. Go back as far as you want. Go check out all the times. Let's do this. Pivots new monthly. No, I want monthly. Okay. You can go back 36 months. And then count how many times price went beyond R3. Not there, not there, not there. Okay, let me turn that off. Boom and boom. Okay, this one did. 1. Not there, not there, not there, not there, not there. In reverse, S3 is the bottom. Not there, not there, not there, not there, not there, not there, not there. 2. And, you know, not much, and then it collapsed. 2. So even the 2 times it's happened so far, there wasn't a major payoff. It collapsed. It collapsed after the fact. So even then, no payoff. Not there, not there, not there. Hit S3 and went up. See, S3 is the opposite of R3. Hit S3 and went up. Not there, not there, not there. I'm not sure what that is. One massive day, but notice it closed. I'm not going to count that as up. You know what? I will. Okay, fine. 3. That time it did work. So it's happened 3 times now. Once it kept going. The other 2 times it collapsed. Not there, not there, not there. Hit it and bounced. Not there. And okay. In 3 months, or sorry, in 36 months, we had 3 moves outside of R3 or S3. 2 of the 3 collapsed just days after, so it's a mirage. It didn't really happen, but it did. And once it kept going, although the volatility was extreme. Okay, 1 out of 36 times. And so somebody asked me, they log in, gold, what do you think about gold? I don't think you know anything about gold. Oh, that's brutal. I know, but like, okay, so we went through all these facts, all the fundamental reasons why gold should go up. Great. Quant Box has been screaming bloody murder for weeks to buy gold. Great. Now it went up, hit target. What do you mean gold? You want to buy it now? Like, dude, it just hit monthly R3. I don't know anything about pivot points. I don't know anything about fundamentals. I don't know anything about week 36. Do you understand? When somebody asked me about gold, what do I think about it? I said, well, you know, week 36 is a top, right? Then I showed it to you using 20 years of data to get to that point. Okay, cool. And so we know, okay, in this period here, okay, this week here, okay, so we're at 29. Oops, let's try to do this a little bit better. Okay. So what we're trying to look at, I guess we should do it here. All right. So somewhere around here is week 36. Okay. And then we can do week 39. Do we want to do it that way? Week 36. Let's do this week 30, week 42. I know there's quite a few weeks, right? Well, every year is slightly different. What I'm suggesting is in this period of just before and just after week 36, you should expect a peak in gold. Now, not a reversal, but a peak. So is it possible it does this, and then 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 this? Is that possible? If it usually happens, what do you think? Is this year different? Oh, yeah. Every year is different. Okay. How do you use something called the internet? What's the current week? The week is 29. You just Google it. Week of the year. What's the current week number? Done. Week 29. Easy. Okay, Quant Box has it, but you know, that's the easiest way. Okay. Now, depending on, and that's the thing. That's the other thing when it comes to like, do you count the first 2 days, if the last day is a Saturday or a Sunday, do you count that as a week or not? So one way to do it here is on Quant Box, this is week 28. Okay, cool. But what we want to get to, so it's just counting it different the first week, right? All right. But if you thought that on average, looking at 20 years of data, gold tends to peak in the next few weeks. Okay? And then, because we know, like, even though that's average, it could be nonsense. Ridiculous. It could be ridiculous, right? Central banks are buying gold. Nobody cares what, the 20-year average if something unique is happening. Okay, so don't overdo it. But you do know technical analysis, right? I mean, you got to know what you stand for. The bias. Are you a bull? Yeah, I'm a bull. Great. Do you know technical analysis? Yeah. So do you know how to trade? Yeah. So where's the most aggressive top you could possibly make up? The most ridiculous target for the month of July. Right there. It's basic training 101 at Investor Bootcamp. Basic training. It's so simple. Like, you don't know how to trade if you don't know these basic rules of engagement. So you're like, well, you can't hope and pray for anything more than that. You're so blessed to have been able to take this up to R3. And then I could just very quickly just show you the last 3 years, 36 months, and it rarely ever goes up beyond that. And even when it did, 2/3 of the time it did this. So it still makes sense. And in fact, you would just buy it back here probably anyways, right? On a roll reversal. Once again, very basic technical analysis. So look, I'm just pointing it out. It's all there. You have all the information. It only costs money. It only takes a little bit of time. It only takes some discipline and some patience and some preparation. But we know 95% of traders don't have any of that. So are you different? Are you unique? Are you special? Are you going to stand up and fight? Are you going to use the tools? Do you actually know how to trade? Or do you just follow some YouTube guru idiots who have no education, are not licensed and registered, never really traded any serious levels of money or any money at all? Just kids on YouTube getting rich quick, driving Lambos. Really? Do they raise children and send them to university? It takes more money to send a child to university than to buy a Lamborghini. So which one is more manly? The kid with the Lambo or the father with 2 kids in university? Which one's the man? Okay. So which one are you? Which one do you want to be? Who are you listening to? This is what I'm kind of getting at, right? I'm fired up. You can't handle the truth, right? Who are you listening to? Okay? Yeah. Be careful. It's dangerous out there where you don't need any experience, education, or registration to get on YouTube and talk about finance. Be extremely careful who you listen to. And then clarify everything in your life. Clear the clutter, clear the noise. And there are 3 things that you need: technical analysis, fundamental analysis, and trader psychology to have the fortitude to improve and survive the challenge of being a trader. It's not easy. It's blood, sweat, and tears. It's hard work. We can have fun doing it, but it's not necessarily sexy. But if you get it right, it pays too much money. But you will have to work for it, And you will need to build a sustainable small business around your trading. If you even think for a moment, get rich quick, you have already failed. Just quit now. Okay? Okay? Maybe you can invest $2,000 into Grant Cardone and he'll put you into commercial real estate and you'll get rich. But stop wasting it on Forex trading if you're not going to take it seriously, right? So be competitive. I'm motivating you. Okay? Like, for example, get an ECN. Yeah, I'll bring them up right now. Get an ECN. Cool. Learn how to trade. Get a good tool. ECN. This one. Here we go. Yeah. Get an ECN. Have good tools. Okay? Quant Box I showed you multiple times today. Okay, if you don't have a macroeconomics degree, I do. I can work for you. You could be my boss. I can be your econ bitch. Every morning I'll go through all this info and we can talk about it. And I can explain it and I can break things down. Cool, right? Okay. Nazi down hard today. Yeah. Russell's even down a little bit. Yep. So I thinned the herd, right? I took most of my exposure off of NASDAQ about 6 weeks ago. I'm still in the stock market. I have a lot less there. Yeah. Just a quickie here, quick and dirty. There's still some risk on a 3. We've lost the. Oh no, it's all collapsed. All right, so everything collapsed. Okay, be careful, be careful, be careful, be careful, be careful, be careful, be careful. Okay, what is this telling you? Quant Box is looking at volatility on 3 time frames. Looking at yen pairs on 3 time frames, long-term treasury yields on 3 time frames, gold on 3 time frames, short-term treasuries on 3 time frames, the US dollar on 3 time frames, the S&P 500 on 3 time frames, and the options market on 3 time frames. Correlating everything together based on how these constituencies are individually trading. There's no collusion here. They're making individual decisions, but we're looking at all these different constituencies on aggregate. We can tell you the risk on we had yesterday is risk gone. And neutral, neutral, neutral. But if you force trades today, it may not have worked very well for you. Yeah. And that would be a shame. So what is this telling you? Be careful, be careful, be careful. Now, let's talk about gold for a second. I just showed you. Fundamentally, it should go up. But, right, today and this week, okay, and this month. Okay, this month, gold has been bullish. Quant Box has been bullish on gold the whole month. And it went up 5.5%. Then earlier in the last 7 days, so last week and then now this week, we were hitting that monthly R3. And it gave some back. And this 5.66 includes the pullback. So this was probably up closer to 8%. And today it's flat. But we are at monthly R3. It makes total sense. That's what's happening now. It doesn't change on the short run, macroeconomic data, but something technically is definitely going on, and maybe that leads to a shift in the fundamentals, right? Okay? So it's still fundamentally bullish, but not when it comes to COT data. Okay? The dollar's just as strong or almost as strong. What about retail? Retail's 50-50. Okay? There's a lot of weird things going on. It's projected to go higher, but remember, this isn't technical analysis. This is statistical analysis. So we can be smarter than this, and we take a look at all of that, and you're like, oh, it's interesting. It might be changing. Now, July is usually an up month, and it is an up month. Okay, see? Seasonality is a 2. But look at the gray line. Here's the 20-year average. Here's the 5-year average. Look at what's happened this year. Oh my God. Now we're stretched up through the M4, through the R2, through the M5, to the R3. We are so stretched up. We're up on our tippy toes. Could be a top. Will it be? Oh, I don't know. Should you be ready and willing and able to capitalize on that? Either take your profit, move your stop, or maybe get short? Well, you know what? You need to make some decisions. Okay? Going back to this, you can say, well, I want to stay bullish on gold. That's cool. Do you know how to trade that? Once again, basic technical analysis skills, right? A trap and break type strategy. Doesn't look like that's happening. So once again, what I teach, what I've taught for 20 years, is you always, 100% of the time, exit at R3. Does it feel like I'm right? Does it look like I'm right? Is it quite possible I'm right? Well, that's for you to decide. So, get an account at tradersway.com. Get an ECN. Join Investor Bootcamp. It's not a lot of money. Get educated. Invest into your future. It's $88 for crying out loud. Cool. Quant Box is next. TRADARS on top of that. It's going to be your platform, your research and analysis and performance platform for your successful small trading business. You're going to turn the amateur off and you're going to turn professional. Peace on earth. May the pips be with you.